What's going on, guys? So we're going to go over a simple day trading slash scalping strategy that you can use. This strategy is very, very simple. However, it does require you to follow the rules to the exact T. If you don't follow the rules to a T, your win to loss ratio is going to get skewed and your losses can become bigger than your winners. So we really need to stay focused on taking the best setups. Also, we need to focus on taking profits when we do have them and cutting our losers very, very short. So this strategy is going to require you to use the 5-minute time frame. It's also going to require you to have the 20 period simple moving average on your screen. That's the blue line that you can see running across the chart here. The chart that we're going to use is AMD. If you followed AMD today, the stock was up $7.10, 4.5%, closed at 161.91. They did have some news in the daytime today. Also ran after hours. It's at 163.21. If the futures continue to stay where they're at or open up flat, I could see AMD gapping up tomorrow and then maybe possibly putting in another little leg towards all-time highs. So we're going to get into the strategy here. The strategy, how I like to play it, after 7 o'clock. The only reason being because that first 30 minutes of the market open is generally the most volatile. Stocks are moving up, they're moving down, they're putting big spikes, and then they're wicking down, or vice versa. They're dropping lower and then spiking back up. So I kind of like to let the first 30-45 minutes of the day play out depending on how the chart is setting up, and then I like to try to look for my trades at that point in time. So if we just go ahead and look, what we are looking to do is look for the stock trading above the 20 period moving average or below the 20 period moving average. And what we're looking for is a reclaim of that 20 period moving average, or we're looking for a breakdown close underneath the 20 period moving average. That is it. It is very, very simple. Now, here's where it can get a little tricky. I actually messed this up myself today just because I came into the market with a bias. As a day trader, as a scalper, you cannot be long biased or short biased. You have to keep an open mind. Reason being is that if you come in thinking that the market is going lower, you get your first initial move, it bounces, goes higher, you potentially could miss out on a reversal. If you think the market is going higher, puts in a high, ends up crashing through the 20 period moving average, and you don't want to take it because you absolutely think the market's going higher, and the market drops 20% in a day, the stock goes down 10 points, you miss out on a move because you thought the stock was going higher. That's a little bit what I thought was going to happen today with AMD. I thought we were going to come up here. I seen us making these highs right off the bell around 159, 160, kind of touched it 2 times. I thought, okay, triple Qs did run overnight. The NASDAQ futures were up huge. We opened the day with a bit of a gap up. I thought we were going to get stuffed into supply. Again, that's what happens when you start thinking you missed the move. So I actually did take the move properly off the jump. Like I said, I wait 30 minutes before the market is open. I was looking, it was obviously trading above. Let me just bring out my drawing tool here. Right at market open, we were trading above the 20 period moving average. So if we were to break down below that, I would be looking to take a short position on AMD, depending on if the NASDAQ futures are also dropping as well. So if the NASDAQ futures were continuing to just rip higher and this was dropping below the 20 period moving average, I probably would have left it alone. But at this point in time, the NASDAQ futures were also taking a little bit of a dip. So I did take my entry here. You see this candle, we got our first close below the 20 period moving average. All I was looking for was a confirmation of that 20 period moving average low. We did get it on this candle here. So this was my entry candle. I put my money into this candle here. And here's where I messed up. 1, 2, 3 pushes lower. I should have taken my profits here. Okay. I believe at the time I was around 25 to 30% profitable on my options contracts. I did take 3 of them. So it was a nice little move. A nice little scalp in 5, 10, 15, 20 minutes here. The problem is I started to get greedy at this point in time. I thought that the NASDAQ futures were going to continue to get stuffed at that supply and keep on selling off. I thought we were going to consolidate here, have this little pop candle here, and then start to trade lower. Thought this was going to be a little bit of a pause. It was not. It was a reversal. So on this green bar here, I ended up selling my options contracts for just about break even on that trade, plus or minus a cup of coffee there. So just to get into the move again, what you are looking for is to be trading over the 20 period moving average. What you are looking for is a confirmation to the downside. As soon as you get that confirmation, you are going to put your money into this candle here on that confirmation. For a scalp, what you are looking for is 2 to 3 pushes lower, and then you're just going to take your profits. This is 1 push, this is 2 push, this is 3 push. You could have taken profits here or taken profits here. End of the scalp, okay? Now, being that you're a day trader and a scalper, you do not have a long or short bias. So when you see this move here start to reverse and you see our first close on this candle back above the 20 period moving average, you would look for a confirmation of these highs to then get in. This candle here would have been your entry candle, and you can just see AMD put in a fantastic move for the rest of the day. I did not take that trade to the long side just due to the fact that I did have a bias, and I was also playing another stock at the same time, so it was a little bit hard to watch both of the stocks at the same time, being that I was trying to manage the other trade. But if you did not take this short position here, okay, you did not take this short position here and you were looking for a long setup, this would be the play on the long side. You get your first close. We are looking to be trading under the 20 period moving average, which we were. We are looking for a close over the 20 period moving average, and we are looking for a confirmation of this close. Now, it could either be at the candle or at the top of the wick. The choice is yours, okay? So as soon as you get a breakthrough of this candle or this top wick, you would be going long. If you were waiting for the top wick, your entry would have come around 8:30 in the morning. If you were looking for a confirmation of the candle, your entry would have came probably on the next 1 or 2 candles here. You would have had to endure a little bit of a dip. What is the rule for our stop out on this play here? If this is our reason, if this candle is our reason why we're taking the trade, what would be our stop? Our stop would be any close below the 20 period moving average. So this is how I kind of like to play it. If we are starting the move and you just get into the move, I am looking for a significant close below the 20 period moving average, meaning that this candle here did break and close, but it's you have to think about the moving averages, okay, as a guide. It's a delayed moving average price line here. This line is not concrete, so we have to kind of look at the moving averages like this. You know, I wish that our moving averages, instead of it just being more of a straight line, would be more like this. Okay, so as long as we don't get a significant break below this 20 period moving average, I would still be in the trade. However, this could have stopped you out here. So one rule, since we are playing the 5-minute time frame, one rule, we can give ourselves a little bit more risk and we can have a more defined stop loss if we do this. If this is our reason why candle here as to why we're going to take this play long and we are going to enter this trade above the break, we can do one of two things. We can give our stop loss the entry candle low, okay? The entry candle low. If that is too much risk for you, okay, this is what you can do. 1 close, 2 closes. So you would use 2 candles closing under the 20 period moving average or over the 20 period moving average, depending on which direction you're playing this trade, to enter or exit the stop. That is the rule. Okay, we have 2 areas to exit the stop after we get in. We use our entry candles low. Any close below our entry candles low, trade is over. Okay, if that's too much risk for you, we're using 2 candles underneath the 20 period moving average. That is our stop. If we enter the play somewhere in here, we're looking to ride it up. We get our first close here. If this next candle closes below, we would just stop out. Unless we get 2 candle closes under the 20 period moving average, we would continue to be in this trade. You can see here, if we did enter anywhere here if I just draw this line here, this is what we're looking for. We're looking for a break of 158. We did get these little peekaboo wicks over here, so you would have taken this play here. You would have experienced a little bit of pullback on this first candle here. However, we do bounce back up and get trading above this 20 period moving average. We kind of chop around and consolidate, and then we get this another peekaboo wick, little climb higher, first close below the 20 period moving average, which is okay. This close is okay just due to the fact that you did not get a second confirmation candle close below the 20 period moving average. You would still be in this trade. Then we get our pop. Okay. When would you take profits on a potential entry here? Would either be 2 candle closes, which would have been here, and that price would have been 159.36. So from your entry of 158.09 to 159.35 is about $1.35 move on the potential trade there. If you are wanting to give it a little bit more room to run and you want to turn this into a little bit more of a day trade, what you could be doing here is just using your entry candles low as a stop. As soon as you get in this trade, as long as we do not close below your entry candles low, you are going to continue to ride this trade. You could also move your stop loss up to every new high. So we put in a new high here. This would be our first stop loss. Here, you can see we make another push. We come down to our stop loss here, tag it, do not close below it, make a new high here. This would be your new stop loss up here at 160. We come up, break this, come back down, get your first close, and you would have been stopped at 159.82. So if you are a scalper, there was room for 1, 2, 3 points in this move. If you are a day trader, you could use your entry candles low as your absolute stop, and as long as this is continuing to ride higher, you would continue to be in this trade all day. Okay, so just to reiterate, you get 2 candles closing below the 20 period moving average, or 2 candles closing over the 20 period moving average if you're shorting, or you use entry candles low as your absolute stop if you're going to use this as a day trade. If you're going to use this as a scalp, you're looking for 2 to 3 pushes higher, or you're looking to move your stop loss up every new high's low. Okay, so every time the stock makes a new high, you're going to use that low candle as your stop. Stock makes a new high, you're going to use that entry's low candle, or that new high's low candle as your stop. I hope that kind of helps.